Hi, I'm Matt Dalton, Head of the Consumer Sector here at Forbes Mazars. And I'm really pleased to be joined by George Lagarias, our Chief Economist. George, thank you for joining me today. We've just gone through the Black Friday sales. So what's on everybody's lips? Are retailers going to have a good Christmas?
Retail is going to have a good Christmas. Look, the UK economy is doing well, and so is the American economy for that matter. Markets are liquid, interest rates are down. People have money now saved because they pay less for their mortgage. And the economy has significantly picked up. The IMF predicted about half the growth we had this year, earlier last year. So the economy is doing well, and that is reflected in UK consumption patterns. People are feeling optimistic. And it does look like consumers don't really fret too much about geopolitical risks, and they focus simply on the money in their pockets.
Are you expecting any impact from the US elections into next year?
Look, the elections are definitely a source of uncertainty. If carried out to their fullest extent, tariffs can be destructive for the global economy. Okay, you could get a lot of inflation, you could get disruption of global supply chains that are going to reverberate across all regions. And while it sounds, counterintuitive, why would central banks responding to a supply crisis raise interest rates? Is that to prevent companies from hiking wages too much, to respond to that, or hiking prices too much as a result of responding to wages. So you want to prevent all that. So if we have a great trade war, then all other things being equal, it's going to be inflationary, and it's going to cause supply problems, not too dissimilar to the ones we saw during the COVID period. And that could have a devastating effect. But consumers don't think like that. They will react to it when they see it. When they see the problem in their pockets, that's the incentive they react to. Okay, they're not anticipatory in their consumption behavior, at least not for the small spending decisions. If you're thinking about buying a house, maybe you're going to think about that stuff, big capital spending decisions. But for the smaller stuff, should I buy a TV? Should I buy a new set of clothes? Should I get good things, during Christmas for my loved ones? They have more money in their pockets, and they're going to use it. And you know what? That's what money is there for anyway.
Well, if you're a retailer though, a company, CFO, what would you be most concerned about at the moment?
So, a CFO needs to be concerned with making sure that their structure is resilient, because obviously going forward, CFOs need to think about the future. So if you see trade wars, you're likely going to see higher interest rates. So if you're leveraged, you need to make sure you're resilient enough, because you're going to have to refinance that debt at higher rates. Okay, and that might be a problem. If I'm an operations officer, I would need to make sure my supply chains are thinner and they are more resilient, because if you're sourcing goods from 16 different countries, it might be more cost efficient, but you might have to scale it down to 5 countries, which is more manageable.
Yeah, just another point on supply chain resilience. What else are you seeing done across the market? Is that specific to retailers, or are you seeing that across other sectors?
This is across everyone. The modern supply chain is a miracle, but you can order a good, and sometimes Amazon can bring it same day to your house. Okay, we've reached that point. It's not very far ago where you'd order something and it would take a month to reach you. Okay, but this speed is relied on a lot of things going well, as programmed across many different countries. Okay, and we saw during COVID, when all it took really was taking China out of circulation for a little bit, and we saw shortages in so many goods. Okay, and when you have shortages in goods, what happens is that the big companies bid them up to be the first ones that are going to receive them when the new batch comes up, and that's inflation. Okay, meanwhile, if you don't buy it from the big company, you can't find it anyway. Okay, so obviously they have to be cognizant of all that, and they have to make sure they have built redundancies within their supply chain. If I don't go to John, I need to go to George.
And if we look at different countries, how does the UK compare to the rest of Europe? and probably even the US for that matter.
Well, it sort of depends which industries you're looking at. The UK is very much services driven. Services tend to have thinner supply chains. So if the UK was a car manufacturer, for example, which it is, but I'm saying that's not the main business, then obviously that's a big problem, because to create a car you need parts from all over the world. Yeah. But if you're exporting services, then your supply chain is thinner, because you're exporting expertise. So the UK, although it is one of the most open economies in the world, which means in theory it should be one of the most vulnerable to an external slowdown, in terms of supply chain disruptions, because there is a lot of services in the economy, it should be a little bit better positioned than more industrial countries, like Germany, for example.
Yeah, and the forecasted growth rates for next year, for 2025, are not particularly high.
Well, in the UK is projected to grow by the IMF by 1.5%, which is, with an average of 1.8, which was pegged down after Brexit to 1.6. So 1.5, 1.6, that is at par with the course. The UK is actually projected to do well. It is Europe that is now facing significant slowdown in growth. And yes, because Europe is responsible for 2/3 of trade with the UK, that creates downside risks for the UK, because on the one hand you might face tariffs from across the Atlantic, and looking to the east you may face just a slowing market that can buy your services and goods.
So if you're a retailer, would you be concerned at the moment going into 2025?
I would be. I would make sure that I can export to as many different countries as possible. So what I want is to import from as few countries as possible, to have a thin supply chain, and then I would like to have a very wide network of potential exports. Because if you rely on one country or two countries and these countries face significant slowdown, then you have a problem.
If you look at the retail market, there's a lot of large domestic retail companies. Are they impacted differently to, say, international retailers?
In one sense, yes, but ultimately, the fact that they're domestic, still they could be reliant even for a few key ingredients on a global supply chain. So in theory, yes. In practice, all it takes is just wanting the one thing that you cannot find in the global market, and then you don't have a product. Case in point, China recently banned exports of gallium and germanium and some rare earths to the US. You need gallium and germanium to create anything from solar panels to electric vehicles. So all you need is a chokehold on one particular good, on one particular even raw material, and then you have a problem. So while we can draw a distinction, it sort of depends on how vulnerable you are to even this one product.
You touched on China there. Is anything else around China we should be concerned about into next year?
No, I don't think so. I think, look, China is slowing down. It's suffering from a classic real estate bubble popping, which tends to have very long-term effects on the economy. Its demographics are bad. After the one-child policy, the demographics crashed. Having said that, they are stimulating their economy, and they do suffer from chronic overcapacity, but they are stimulating their economy. As long as they don't crash, which is a problem always with China, because we never really know what's happening behind the numbers, but as long as they don't crash, the present geopolitical shift is actually a huge opportunity for them to expand their markets. If consumers, especially in Europe, find it difficult to trade with Americans, they might trade more with Chinese and turn towards Chinese consumers. Okay, so for China, this whole thing is, and America building having a more competitive approach to economic growth. For China, that could be an opening gambit to gaining a lot more acceptance from European countries.
If we just turn it back locally into the UK market, we've just had the autumn budget, it's an impact on retailers. Look, you've got national insurance increases, changes the national minimum wage, so there's quite a bit of a headwind there. Where do you see retailers getting growth from? How are they going to get growth? Where's that money going to come from?
So one thing we need to understand is that changes in national insurance are a little bit inflationary. In fact, prediction says that about 70% of those changes of those extra charges are probably going to go back to the consumer in the form of higher prices. So from the budget, I see an immediate shrinkage in margins, but going forward this will be passed on to the consumer to restore margins, obviously. What I see is a disposition for growth, but what I think is the key element, it wasn't in the budget, but it was in subsequent discussions by Rachel Reeves, is a willingness to deregulate the banking system. This is the key growth driver for 2025, and I would argue for the next 3 years. If banking is deregulated, then instead of, and you do this to grow not by debt but by credit, essentially, if banking is deregulated, then you could see significant economic growth, you could see a significant pickup in consumption, all other things being equal. Bank deregulation is not a magic bullet because it does tend to create banking crisis 5-7 years down the line. But in a more immediate sense, it does let loose a lot of consumer animal spirits. Okay, so despite how it may sound, I'm actually positive because I do see this potential of bank deregulation, and I know that on first instance, the effects can be very good for an economy.
And final question, George. You're a CFO. January 1st, you come back to the office after your holiday. What's the one thing in your inbox you'd be prioritising?
I think I should review the capital structure of my company. I mean, that's the number one job of the CFO anyway. I would review the capital structure of my company and make sure, in terms of operational and financial leverage, I am resilient enough, because it could get rocky out there. Rocky is not necessarily bad, okay, but if on one hand you have trade wars, on the other hand you have bank deregulation, they may cancel each other out, but they still are going to create a very volatile environment. So I want to make sure all my ducks are in a row, so to speak, and I need to make sure I'm not overexposed to risk, because yes, the trend could eventually go upwards, but if it's a rocky way upwards, then some companies might find themselves out of the market. So you need to be able to withstand volatility.
Well, thank you, George. It's been a really fascinating conversation, and have a fantastic Christmas, and we'll see you in the new year.
Thank you, you too.